Let me see. I'm coming, sorry. Okay. So I guess you can share your screen right now, yeah?
Yes.
All right, so share me your screen. Can you still see my own screen?
No.
Okay.
Okay. So what I mean is that this 4 hour here, this 4 hour bearish structure,
Okay.
how we can trade the internal of this 4 hour bearish structure that is going down now.
Okay.
Like if you want to catch the internal.
Yeah, I'm listening. I'm trying to understand you, yeah?
From here down,
Okay.
normally
Higher,
I would have
higher, lower,
traded I would
lower,
have
high.
traded the here.
Okay. Okay.
I would have traded the retest here.
Okay,
Like
yes.
how to get in on time before this whole
Move. Okay, is that what you're
move.
asking?
Yeah.
Okay. Now, draw your
Instead
feet.
of going in. Okay, let me go back to this.
Go to the 4 hours. Draw your fib.
Oh, my fib. My fib don't have this
That's you see,
premium.
as that's fine. As you drew your fib, that's where it's landing.
Yes.
You take the trade.
Inside this area here.
Yes.
So my point is I want to get in on time instead of waiting for all this candle to pass.
That's what I'm saying. You see how it went up to this point.
Yes.
Good. You can put a pending order there.
Okay.
Put a pending
So
order.
this depending order now, how am I sure that it won't continue going up?
Now you would have done your analysis to see that okay, there's a retracement, possible retracement, like what I told you using the edge strategy, right? The places you see that there's liquidity on this down point where after this equal, you're trying to this arrow on the left side, this arrow before this, take your mouse to this point. Yeah, you see there's liquidity here. It's forming an equal. So you know that the market is going to come and want to sweep it down before it goes back up again. That's an equal.
So
You get
so normally what I would have done is go to the 15 minutes.
Yeah.
And use Fibonacci there. Before.
Yeah.
This is why I don't like zooming out.
Don't worry. I like how clean your chart is looking. Like it's looking so much like my charts. Just the way I like it.
I would have drew my normal Fibonacci.
Yeah.
On this zone here. This area here, Fibonacci from swing high to swing low.
Okay.
It's still okay, right?
Yeah, it's still not bad. It's still not bad. Then you jump in on the trade and put the closest high.
Yes.
Yeah.
So it's still okay to get an entry on this 15 minutes instead of the
yeah, you can still get an entry. Now the whole purpose of using
15 minutes on the okay.
Now the whole purpose of 15 minutes is to get better entries. Better entries, very clean entries. You can use your 4 hours and jump in on a trade, right? And I will have more risk to reward because I will enter at the appropriate time with clean entry. That's the whole purpose of 15 minutes for me.
Okay. So instead of using the 15 minutes, also then straight away putting my pending order on the
You put your
4 hour
pending order,
order
yeah. Now, okay.
on that 15-minute swing high and swing low. So that's the question I'm asking. Like that 15 minutes internal swing low, swing high. Like
Yeah.
I could trade those internal structures. Like how
Yes.
I could trade those internal structures.
How can you trade it? Is that what you're asking?
Yes. Even
Let
when
me
I know that yeah, the trend, the external 4 hour is bearish.
okay, I'm coming. So now from this point A where you are at, I wish you can see how I'm mapping it out, but then let's continue with your chart. From this high,
I could give you like access, ask for control remote.
okay, I'm coming.
Mm.
Okay, can you see me?
Yes.
Okay, let me take it down.
Okay.
Now you see from this point here, right?
Yeah.
Where's your fib? This is your fib.
Mm.
Now, if you put your fib from this point to this point, right,
Yeah.
it's going to give you an entry around here.
Mm.
Now, map that area out, this area out, scale it down to your 15 minutes.
Okay.
Scale it down to your 15 minutes. I'm coming, sorry.
Okay. Help me delete this.
Now, this should be the area. This is your fib, yeah?
Yes.
So how do I take your fib up right now? How do I take your fib up?
Yes, like that. Delete that one. Okay.
Okay, from here to here. Okay. Now, this area here, this is my area of interest right now. It's my AOI, area of interest. For me, I'm going to put a pending order. Let's say I get greedy. But then we're not trading greed alone. So put a pending order. I use a lot of pending order. I hardly, before you see me jump on a trade, like just jump into this trade like that, I must be, let's say, either I don't want to miss out. But then for the fact that my schedule, I told you trading is about the individual. So for my schedule, I'm always busy. Most times I'm always on the road. Most times I'm either mentoring people on both psychology and all those things. So I'm hardly always on my chart. So for me not to miss out, although I miss a lot of trades,
Mm.
but then the whole thing is if I want to make back those trades, it's always high. I always have good risks to reward. My trades are always very, very, very cool. So now the point here is to scale up now to see if you can use the 15 minutes, right? Now you've
Yes.
from here to here, you've gotten an entry. Let's just say you now miss to this point, Abby.
Yeah.
Good.
That's 15 minutes trend. Like if you're entering from the 4 hour
Yeah,
swing traders, like I just want to catch normal fast trade.
I get. So now, okay, let's see. If we were to jump on this trade, now you've seen that this move have happened. There's always going to be a pullback. There
Mm.
will always be a pullback. So we are going to catch the pullback and now write it down. So this is what we'll do. We'll still catch this our friend. The Fibonacci is always our friend, just as the Nigerian police is always your friend. So we'll have to use our fib. I don't know why it's not clicking. Okay. We'll use our feedback. Okay. And let's see. But normally I'm coming. Okay. Normally this fib is supposed to be giving me a very clear, it's supposed to be giving me around this zone. But I guess this is a 50, this is a risk, this is a 50% on this zone, which is not bad. But normally it's supposed to give me around this point. And even if you want to still scale up, you can go to your 5 minutes to get very good entries. Hope I've not yet lost on your screen. No. I've been in your screen. I like how clean your chart is looking for real. Like I'm impressed.
Thank you. My chart
I
has
make
changed from support and resistance.
is
So
that
I say it has changed from support and resistance. Like normal trade line, support
now
resistance,
now you're
engulf
not
pattern.
trading like you're not trading like us. but but are you noticing improvement in your trading?
Yeah, I do, but I'm still battling with psychology.
Psychology, yeah, psychology. Don't worry. See, we'll take it one step at a time for real. All right. So I don't know why it's showing 100% bar, whatever.
It's all this their
Ads.
paid ads.
Okay. I
Okay,
guess it's the
you
plan you're
click
using.
on
What plan are you on? Sorry to cut to dive.
the $10 plan, but it's finished. It's expired.
Is there a
Okay,
plan for
you
ten
click
dollar?
on close. Yeah,
Seriously, and you can use how many seconds? You can still use seconds in this using this plan.
no, you can't use seconds. Only from minutes. 1 minute to
Okay, what plan can you use seconds?
I don't know. Maybe those yearly plan.
Because I've forgot because I know that yearly plan, yeah. But okay, back to what I was saying. How can I exit this thing,
Okay,
please?
press close a plan, then they will take you to another page, then you cancel that page.
Oh,
Yeah, then cancel.
how would I cancel it? That's not yet popped up.
Go to the aura, cancel from the. Okay, let me cancel for you.
Can you close it from your own end?
Yes, let me
All
do
right,
it.
close it then. Close it then.
Why is it still looking like this?
Okay. So it doesn't waste our time. Let me see. So it doesn't waste our time. Let me see. Let me see. Let me jump.
Okay.
Have you seen it? Have you done it?
Let me give you access to post because I don't know why this thing is acting this way.
Okay, let me see if I can just jump on my own. Okay, let me see if I can. Let me let me share my
I've
own
made you.
screen. Oh, okay. Let me share my own screen. So let's see.
Yeah, I've made you host. You can share your screen.
Okay, so what this thing was that, please? What pair?
It was GBP JPY.
All
Same
right.
here.
So okay. I want to take off this thing already because I hate my charts looking so messy. Hate my chart looking so messy. Okay. Let me not just waste your time. Okay. So where were we? We were somewhere around here. You said you don't want to miss this move.
Like I don't want to like maybe use the 15 minutes in case I'm trading intraday
Okay, now
and
see, I told you something
I'm not
about, I said it's supposed to
starting.
be around this zone. So let me use my fib from here to here. What are you saying?
Yeah, 61. Like
Good.
when I'm not in the chat, like if I'm not in the chat before this 61 got
Yeah.
triggered, I
Put a
want to
pending order.
continue the move down.
Okay. From, let's say from here like this, before this move, let's say
Yes,
it has gotten to this point. Okay. Now, since
yeah.
you've missed this move, we'll scale it down. Let's go to the 1 hour. Let's see. At what point do you want to enter since you've missed the move? At what point? Let me see. Choose a point from here.
I don't know, like anywhere.
Right. Let's see. Let's scale it down. But before we scale it down, let me mark a zone. Let me mark one point like that. Let me see from here. Let's see. Okay. Let me be sure. Let's go. Are you there with me?
Yes.
All right. So now we've missed this move here that spiked down. Let's say it has
Mm,
triggered. And we're like, what the fuck? Sorry, I'm using the fuck word. I'm like, okay,
mm,
how do we get this back? Right? This is what I'll do. Now we've seen this thing. I'm waiting for a pullback. For me, I'm waiting for a pullback. So what do we do? Let's see. The Fibonacci is always your friend, remember. So this is what me I will do. As I've missed this move, I'm seeing the market is already going. I'm like, geez, let's say at this point, let me see. Let's say at this point right now, right? Can you see me?
yeah.
Let's say at this point now, the market has already gotten to this point and is already leaving us.
Mm,
This is what me I would do. I want to take off this guy. Okay, no need so that we don't get confused. This is what me I would do. As I've seen that, okay, come, this is what this thing is doing. I'm scaling it down to the 15 minutes. Scaling it down to 15 minutes for clearer view. If you're not seeing it clear on the higher time frame, on the lower time frame, go to the higher time frame, you will see it clear. And if you're not seeing it too clear on the higher time frame, go to the lower time frame, you see it clear. It's vice versa. So now this is what me I would do as a person. I've seen that, okay, this, even if I say I want to use order block, this order block is not so valid to me. So what me I'm expecting, this is what me I would do. I will draw a fib again, that same fib, because the fib is my friend from here to here. Swing high, swing low, right?
mm.
So I want to be looking
Why
at
why is that other block not valid?
this one
Mm,
because I'm not swinging it. I'm not, I mean, sorry, I'm not a scalper. Scalpers can use this.
okay.
So personally, okay, now you can see another order block that is here, that I created here, like boom. Although it's not
Mm,
valid, it's not too strong, but then it can serve. But that's not why I'm taking this trade. Now I want, because I'm in a hurry and I don't want to miss out. I've already missed out this one. So I'm like,
mm.
okay, whatever happens, let me just see if I will just risk it. I will take this trade from here, in my opinion, for me. Now I'm taking it, in my opinion, I'm taking it with, let's say, lower risk. And now I'm going to
Okay,
swing it
it
up to
must
this.
your pending order must be in the 61.
Yes, always, for me, always, with a touch of
Mm,
psychological level. So taking this trade for me, I'm taking psychological level and fib for this trade, this particular trade, because I don't want to miss it. And remember, I said slightly above the 78.6, my stop loss,
yeah.
slightly. So this is what I want to do. I'm putting a pending order here because I don't want to miss out. And as you already know, we always go for 1:5. So, but 1:5, this is 1:4. Let's just say today, swing low. I'm seeing a trend line liquidity here, right? Now, for me to get my take profit at this point, right? At this point, for me to get my take profit, I'm going to, this is an equal. You see there's liquidity here.
Yes.
So I'm expecting the market obviously go and sweep out liquidity a little bit. So I'm going to either draw my take profit around here, right? But now, not to be greedy, not to exaggerate, I'm trading what the market is giving me, right? This is how I want to take my, this is how I want to set my take profit at this point now. I know that I might want to sweep out this liquidity because I'm seeing liquidity on this point. Market got to this point, went up. Market went here, went up. Market got to this point, came down again. And now we're looking forward to either sweep out this liquidity a little bit. Definitely, I'm 100% sure. Not like 100% sure. Let me not sound too sure, but I know that the market has a tendency to reach this point. But before then, I want to open 2 positions with lower lot size. Like if I'm to risk about, let's say, one standard lot in this for this trade right now, right?
Yes.
I'll use 0.50. Now I'm using for 0.50 to open 2 positions. I'll open 0.30 and 0.20. Are you seeing?
Yeah.
Good. So now I'm going to how I want to get my risk to reward. I know that the market will get to this point, might get to this point, but now not to exaggerate this whole thing or put my expectation too high. Swing high, swing low. This is what I'm saying. You're seeing this to buy now. You're seeing here 60. Draw my pending my fib to get to this point. Now, sorry, draw my take profit to get to this point. Now, mind you, there's liquidity here, there's liquidity here, there's liquidity here. Some people might want to see that this thing, okay, it's not another block, but this is where I'm going to put my take profit. Let's see. Okay. Let's see what happens now. And in this game, there's always what we call patience. So let's see. We're going. Market has created, it has mitigated this place, which I expected. Now it has formed, it has swept out this liquidity. Now I'm expecting a pullback regardless. I'm expecting a pullback. Because market has swept out this liquidity here. So we'll mark this one as good. Market has swept it out. What are we expecting? 2 things involved. If the market should get to this point, I'll close my pending order. If the market should get to this point, I'll close my pending order because it has violated my setup. So let's see. Now it has triggered it, Abi. Now, why I said I will still hold this position is because I saw that the market swept out this liquidity first. Right? With this thing, it did like this. It has swept it out. It has gone back to our entry. That's a pullback. What I'm expecting. And that's the same thing I'm expecting the markets to do here. Sweep out this liquidity, then pull back. So now it has I didn't hear you. Ask your question.
Okay, your Fibonacci, the one you drew.
Yeah.
I thought drawing Fibonacci, I used to think from the first time you drew your Fibonacci, I thought
from here to here.
A pullback, yes.
Yes, to get my entry.
Yeah.
Good.
So I thought it's when the market is pulling back, you draw from the swing high to swing low. Then when it's pulling back,
that's why it's a pending order. You can't really, it's a pending order. So the pending order is going to help, the fib is going to help you get accurate entry for your pending order.
Okay.
Do you understand?
Yeah.
You're sure?
Yes.
All right. So now the market has activated our pending order, right? Let's say you're in the kitchen, you're preparing something to eat, and you don't even know. So now what's happening here? Market is going as expected.
Okay.
All right. Market is just going as expected. Now it has swept out. This is 1.5, Abi. I said we'll take profit 1. We'll take profit at 1:5. So now we've taken our first profit. Let's see. Now I'm targeting this point. Mind you, I said I'm going to take this trade with fib and psychological level. And okay, with a touch of structure, that's the market direction, the structure. Structurally speaking, is bearish. Look at it. Have you seen?
Yes. Yes, it's very.
Trend line one, touch, second trend line touch. It has almost touched. So this one has touched it, confluence one, Fibonacci 2, psychological level 3. So now we've taken our first profit here, right? Now my next target is this point. And I'm expecting another pullback, but I'm not opening another position. Let's see. This pullback was very little, but let's see. I'm not opening another position, like I said. Okay. At this point, let's see. Now, if you want to open another position, let's see. Let me see.
Swing high, swing low. Okay.
Catch it here. Or better still, let's not go too far. Catch it here. That's if you want to open another position. Tendencies might be, you might not even see. You might not catch this trade right now, but then let's see. What happened here?
The 61% got triggered.
The second pending order, Abby?
Mm.
Good. And what did you say again? Another clean 1 to 5, I'm very sure. 1 to 5, Abby?
Yes.
Good.
Yeah.
Let's see how it goes. Now we're having, let's say, 3 positions running. We've taken another profit here. Don't forget. Let's go. Same principle. Okay, now, like I said, this other one has taken profit, I'm very sure. Okay, we got a very clean 1 to 10 here. That's this one. Now, at this point, you can choose to close your whole trade. It's up to you, because my target, remember, was to take out this liquidity here. Now, have you seen what I was just saying about? Now, you had 1, 2. You've gotten very clean trade here. Did I answer your question? Now, let's go back to your 4 hours, and let's see. Now, your 4 hours, remember, I marked it out from here that we missed this trade, but let's see how we're going to scale up and catch it. Are you understanding now? Are you understanding?
Yes.
All right. So, have I answered your question?
Yeah.
So now, as we've swept out this liquidity here, my next target is to start seeing possible rejections at these zones to now sweep out people that were selling. And remember, we're out of the market. Let's take it out. We're out of the market. So I'm expecting another pullback to now mitigate this other block or this other block. So it's up to us to choose. I like using the second order block because this first order block can easily get violated and just go with a spike. And so if I see 2 other blocks, I like using the second order block. So let's try and use this other block. Let's see. I want to catch this trade now. Let's see. So even if we want to take another trade, let's see, we'll take another trade. Remember your GAM box. Let me go back to that GAM box. So you see your GAM box from here, 50% to here, 50%. So we're going, if you're using your GAM box, in the 50% of this, take your, let's just say you stay here and be on the safe side. But then I don't like using big stop loss. I want to just risk small from here. Let's see. I'm expecting the market to come back here and still sell a little bit. Let's see if I'm correct. Okay. This is 5. Okay, let's see. I'm expecting a pullback, but now this pullback now might wound us because this thing was a spike. But I'm still expecting the markets to come through and mitigate this other block. It has mitigated. Now this is getting dicey. You know why? At this point, sincerely speaking, I'm scared. You know why I'm scared? Because
No.
now I can see that the market is giving me liquidity here, plus this liquidity of people selling. So market might want to sweep out this liquidity here. But then we're in the market. We do not close the trade unless we have a major reason to close that trade. So let's see. It almost triggered, but it didn't trigger. And it triggered. Now we lost this trade. Like I said, I saw liquidity here. I saw liquidity. So it swept out this liquidity because market knew that people want to take this order block. So now if you scale it up to your smaller time frame, this is another block. If you also scale this thing up, this is another block that I didn't see.
Yes.
I didn't pay attention to it. Now it was 3 other blocks we saw, 1, 2, 3. But I only saw this 1, 2. So that's why in trading you need to open your eyes very well. Now it mitigated this one instead. You see why I say I like using the second one?
Yes.
Now you see how we lost this trade, but let's see what market wants to do now. What did you say? The market just did what it did and is going. So have I answered your question? So now the market is ranging at this point, right? It's ranging.
Yeah. Right now we are in the current range now.
Yeah, we're in this range. So now the market, what I'm expecting now, market is giving us liquidity here, right?
Yeah.
I'm seeing liquidity here, but now I still expect the market. Now, break and retest traders will say this is a breakout. But even if I want to trade, I don't trade break and retest. I just trade strictly the edge strategy.
The break of the trend line, then retest of the trend line.
You get?
Then they will be buying to.
They'll be buying. So, but why I don't
up with the range.
now? If I want to use the break and retest strategy right now, this is not going to be a break and retest for me because these candles are too choppy for me. I want to see candles like this breaking this trend. I want to see candles like this. I want to see Morabozu candle. This are Morabozu candle. This thick candle. This one thick candle, visible ones. But all these candles are too choppy for me to say I want to
Trade break and retest.
trade break and retest. But now we're in this thematic already. So we're expecting I'm still expecting the markets to. Okay, I can see a liquidity here, an equal here. So markets might want to sweep out this liquidity and go up here before it sinks back down. So it's most likely the market might do something like this. Possibly the market might do something like this. Right?
That's what I'm expecting also.
So most likely I'm expecting the market to do something like this.
So you use order block for entry and also 61 retracement for entry.
Yeah, I use order block for entry. I use order blocks for entry, and I use Fibonacci for entry. So my major confluence for me to take any trade, this is what I want. Order block. Where is my? Have I gone and lost the?
You've lost it.
Yes, so order block. Fib. Psychological level.
And
right? Then the third one will come in. Fourth one will be structure.
Okay, structure.
Confluence for me to take any trade. But it comes like this for me. Oh, for me, it comes like this: structure first to know the direction of the market.
Then order block, then Fibonacci, then
When I see the
psychology level.
structure, Fibonacci comes next. But this is the major confluence for me. Psychological level after Fib, then order block.
We didn't add liquidity. We spoke about
Yeah,
liquidity
liquidity
switch.
also under structure, you have liquidity because that's when you see where if the market is going. Like, let's say this is a structure, we know that okay, overall the market is downward. Now we're expecting the market see liquidity here.
Yes.
This is
Okay.
liquidity like this. So it's still under structure.
Okay.
So that's why I didn't add liquidity. Liquidity is just like a child to this structure.
Okay.
Because overall, why I didn't also add liquidity is overall, we're after liquidity.
Yeah.
Overall, what trade is liquidity. We're pursuing anywhere there's liquidity, that's where the market is going. So without liquidity, you won't have a structure.
Yes.
I don't know if you get. Without liquidity, you don't have this guy.
Mm.
And without once you have this structure, you get this number two.
Mm.
After
Fibonacci.
yes, then you get your psychological level. Then this OB, other block.
Okay.
So
Okay, I get it.
uh any other questions?
It's too late for me. No, no, no. For the how will I deal with my psychology now? I've opened the free trial, but I've not started trading on it.
When did you open it?
Just today.
Okay. Have you registered for that? Have you registered for that MFF?
No, I have to take accounts first.
I don't get. Before you register.
Like I have to pay. Yeah, they're asking me to pay.
Okay, don't worry. For your right now, this December period, the market will be a little bit choppy because of
Yeah, I noticed.
the market will be a little bit choppy because of we'll soon be going on
Holiday.
holiday.
Yes.
So and now from 24 to 27, the spread in the market will be too big to
Really?
handle. Yes, spread in the market. That's because there won't be people to trade that much, so they will increase their spread.
Okay.
Yeah. So okay. Let me see. Let me see. All right. Are you there?
Okay.
Yeah, can you hear me?
Yeah.
Okay, so turn on your all right.
It's
So I'm
on.
very sorry. I'm very sorry. My light went off. So
Okay.
yeah, I'm back. So what was I saying before I got interrupted?
We're talking about the internal structure
Okay, let me
inside
go back.
the
Let me go back to my okay. Go back to my okay. So from if you look at it from here, you see the market has been creating higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So, and like I always say, wherever there's liquidity, right, the market will always go in that
yes.
direction to sweep out liquidity because liquidity, which is your money, is what makes this market, is what moves this market. Wherever there's enough, you see some people saying there's no volume in this trade, and they tend to not the market is a little bit choppy. That's because the more volume you see in the market, the more liquidity. So the market goes in that direction where there's liquidity. So that was why you in this spike downwards, market came to sweep out this liquidity on this side, right? Market came to sweep out this liquidity on this side. Can you see my screen? Can you see my screen? Can you see my screen?
Yes, I can.
All right, all right,
I can see your screen.
all right. So market came to sweep out this liquidity on this side. That's why you saw this spike here. So let me.
Yeah.
So okay. Now we're on the external structure. Still on the external. Let's go to the daily. So we'll see it clearly. So mind you, okay, now let's start taking it from here. Let's see. So you can see it clearly. See that the market, this was what it did. It came to create an equal low here. So it came to create an equal low here. It came to create an equal low here. As with this one here. Now, mind you, there's still liquidity on this side, but this is on the higher time frame. That's the external structure. Now let's still scale it up. We can't say this market is going to go up or go down because it has not broken this weekly high, still on the highest time frame. That's the external structure. Neither has it broken this weekly low on the external structure. And as you can see, this is an order block here. This is another block here. It is still yet to come and sweep out or mitigate this other block here. So let me still scale it down. I'm going. Okay, if we draw a trend line, let's draw a trend line. Let me see. Let's draw a trend line. Let's see. If we draw a trend line, this thing is still an upward trend. If you look at it very well.
Yes.
That means the best thing markets can either do is either to come and still create. But now, this OB you see here, this break of structure rather, this is the liquidity swept on this side. Let me change this line to red. So I like using red for my liquidity. Whenever there's liquidity, red. Then I like using black when it's an equal low or just normal trend line. So I'll change this BOS to a liquidity sweep out. That's this. This is what I use this for. So market already swept out the liquidity here. If you look very well, let's scale it down very well. It came to mitigate here. But so now what we're looking at, for me, using this, I would still be seeing, let me see. My overall bias here right now is I'll still be looking at it because one, I don't really have, I'll just be trading with what the market is giving me. I can be trading it up, can be trading it downwards because this is what the market is giving me. I can't really say overall, I'll say it's a buy, although I've been buying it and I've been shorting it. So if we look at using our fib, where did the market relax? Still on my 61. And I like using this 61 because whenever the market breaks it through, that means it has changed direction overall. The market can come to this golden ratio. This is the 50%, which is the 50%. This is the golden ratio. And just get there and go back up. But when it gets to this place to me is a very long stretch for the market to do. Whenever the market gets to 61 for me, 61.8 is a long stretch, and that's the last thing I feel the market can do to stretch out at all, to sweep out liquidity, is to get to this 61. So I like using this 61. 51 is still valid, but I prefer 61 to give me stronger confidence as to reason why I can take that trade. So now you see the market has gotten to this 61. For swing traders, they will take it from here. That's if you're a swing trader, they will take it from here and they will swing it. But now let's move on. And okay, confluence number one, you were to take this trade from here, this is from here. Let me see if I will, let me back test it a little bit. I'm coming. Okay. So if you were to take this trade from here using this whole thing, my confidence number one is the market came to this point, but it didn't touch the trend line. It is not always compulsory for the market to touch the trend line, right? Okay, now let me just say, okay, fine. It's going to get to this point. Let me say, obviously, we're not seeing what the market is going to go to. So my confidence right now is confidence number one. The trend line is showing me higher low, higher high, higher low, higher. It's trying to still form a higher high. It has not broken it yet, mind you. And we mapped out our weekly high, weekly low. So I'm still expecting the market in this case to still break above this, sincerely speaking. But before breaking above this, I'm expecting the market to also come and sweep out liquidity because, like I said, wherever there's liquidity, if you look at, okay, now, real example of the whole, of the whole internal structure. This is an external structure, you know, right? It's showing us is bullish.
Yeah.
External structure is showing us is bullish. Now let's go to the internal structure. Now I want to map out this whole zone like this place like this. I want to map it out so that we don't get confused. Now I've mapped it out, this circle. I'll have to take out this trend line, or no, this, let me take out the fib instead. Let me take out the fib instead. Okay, I will take out the fib and let's go down to the smaller time frame, the internal structure, so that you see. You see, I circled this whole place.
Yes.
Good. So now the internal structure is still saying is bullish. Now, mind you, I said wherever there's liquidity, markets is always going to come to that place. Now, on the internal structure, it's showing us, I'm coming, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? And equal high, higher low, higher high, higher low, higher high, higher low, higher high, equal low. Now, this equal low, like I said, this is the internal structure. This is the 30 minutes. Let me scale it down to 15 minutes so you see it clearly, right? Can you see it?
Yeah. Yes.
All right. So now on this internal structure, you're seeing the market is forming higher low, higher high, lies. This is a clean divergence. Now you've seen whenever you see an equal, I told you do the opposite. The market is either going to, because it's accumulating liquidity, the market is trying to reverse. So now like this, we're seeing an equal here. Let's say this is an equal. I hope this thing is not too rough for you. Are you understanding?
Yes, I can understand.
All right. So now this is an equal low on this point. For me, I'll start looking possibly, like I said, this is an equal. I'll start looking to either buy a little. I'm buying a little because, one, if I want to buy a little, it will go to this point. Let's say, because obviously I will be targeting the liquidity on these zones. There's liquidity for me here, right?
Yeah.
And there's also another liquidity on this trend line liquidity that I told you about. I taught you in our other class, the trend line liquidity, which I expect markets to come and sweep out. So now, the market won't just come and just do higher. It won't always go in one direction, which is going up alone. Now, we've seen this equal low giving us another confluence that we might see a possible sell and a retracement. Now, this trend line liquidity is another thing to start looking out for, because 1, 2, 3, 4, 5, this is liquidity. And if you look on the higher time, or if you look up, you would see that there's no much liquidity. All what you're seeing is an equal. This is one, the liquidity on this side and the liquidity on this side. Only these two. Now, mind you, The swing traders use day traders' money to feed. So they want to sweep out this liquidity first before they take out these big guys. This is in my own opinion. So now the higher time frame, which is the external time frame, is showing us a bullish run. Like it's showing us that the market is bullish. Lower time frame is showing us it's still bullish, but now I'm expecting to sell. Doesn't mean I'm trying to trade the trend rather, but I'm trying to sweep out this liquidity. I'm trying to change my directive and my focus, how I think. I want to think like these market makers. I want to think like the big guys, the banks. The big guys are always after your small $100, $200, $1,000, $500,000, and so on. This is what they're after. They're after they're after your money, because it's from your own money they will use and fund themselves. Now, at this point, what I want to do at this point like this, for me, I'll start looking for a possible sell. I'm tired of buying. For me, I'll start looking for a possible sell. Now we'll go with our fib from the top, right, to this equal, the bottom. Now I'm looking forward to come back, for the market to come back to this my zone, to this zone. Now, it's coming back to this zone not because of anything. It's coming back to this zone not because of anything, but to sweep out also this liquidity you see on this point. You're seeing a liquidity here, right?
Yeah.
This side, you see a liquidity. Here, you see a liquidity. Still this trend line liquidity, you still see them. So I'm expecting the markets to take out this liquidity and create before it starts selling off. So I'm going to put a pending order for myself. Let's see how this goes. Right? Obviously, I don't like using big lot size, so we'll just use something like this. Slightly above the 78.6. Slightly. It shouldn't be plain, it shouldn't be much. Just slightly above the 7. This is how I trade. Slightly above it. So I want to take out this thing to give me a very clean. I don't like my chart being messy. So I'm going to put a pending order around this place. All right. So what I'm expecting right now is my confidence to take trade. Number one, psychological level, which is this. Yeah. Number two, 61.8. Number three, what's number three?
Fibonacci.
That's the 61.8, the fib.
Liquidity.
That liquidity, good. So now what I'm expecting, and now I like to break it. I like to break even and at least 1:5. Let's say, let's not be too greedy, but normally if I want to go aggressive, let's say we take it, since we're seeing liquidity on all the side, this might not happen in a day, mind you. So you don't just go and because you want to catch big risks to reward, you now start exaggerating where the market will go. No, but I'm just saying at 1:5, I like to take profit, like take some profit and I write the rest down. So let's see how this goes. At this point, I'm going to take it out. I've placed my pending order. I'm expecting the market to come and sweep out this liquidity first. Let's see how it goes. So we move like this. Okay. That's gone to almost our stop loss. Let's see. If we lose the trade, we lose it, but we move. This is basically how I trade. If you lose, you lose. But then, okay, let's see. The market has given us, this should be, let's say, at this point, let's see. Market has given us 1:3, but now you can set your stop loss to break even. All right?
Okay.
You can set your stop loss to break even. So let's see, let's continue riding. Now, mind you, the market has come to sweep out this liquidity here, like I said. Yeah. Remember that liquidity I said at this point, right? Yes. Market has swept it out. So we are done with this trend line liquidity on this side. So we're looking forward to sweep out the whole of this liquidity. Mind you, it doesn't change the fact that on the external time frame, which is the weekly, from the weekly, the monthly, the weekly, the daily, the 4 hours, and the 1 hour, doesn't change the fact that the market is still bullish. But now this is the external structure and the internal structure. Now the internal structure is saying it's bearish now. I don't know if you're getting.
Yeah.
Good. So now let's see how it goes. We're going down. Remember, your stop loss has been set to break even. Now, reason why I put this supply zone here is because of I saw something like this is a supply zone. Obviously, that's why this is a supply zone for me. So now let's see if it's going to hold. Okay, now the market should be giving us a very clean 1 to 5. If you're someone that opens multiple positions, now if you want to open another position, right? Give me a few minutes.
Okay.
Okay, now the market has given us a very clean 1 to 5. If you're somebody that used to open multiple positions, now you can still scale up and open. But then, in my opinion, when you're taking this first trade, open 2 positions with proper risk management. I'll give you an example later on. Give me a few minutes, please. So, okay, if you want to still scale up and open another position, right? Now you could still look at this. Now, remember the market has given us 1 to 5. Let's see if I'm correct. Okay, not yet 1 to 5. Okay, fine. But then your stop loss has already been set to break even. Let's see how the market goes. Can you see it? This should be a 1 to 5 right now. This should be a 1 to 5. This is just how I trade. This is a 1 to 5. Exactly. Now you've taken profit, right? And you still have one position running. Because you're opening 2 positions. One position you've taken profit at 1:5. Then the other one, you're leaving it. Give me a few minutes.
Okay.
Okay. Sorry. I went to attend to something. So okay, now you've taken profit at 1:5, and let's see how the market goes. If you want to still open multiple positions, or like another position, you can choose to open, but then I will show you another one. I just want to see how the market goes. Now we're saying this is what's happening. Market is still doing its thing. Market is still doing its thing. Still doing its thing. Now, a lot of people will want to take profit at this trend line. A lot of people want to take profit at this trend line. Is it a bad thing? No. The whole idea is to make money. We're not here to catch pips alone. We're here to make money. We're not here to hit just the trademark. We're here to make money. They put this at the back of your mind. No matter the amount of profit you make, it is profit. Don't feel bad. If you close too early, don't feel bad. If you close, so long you're making profit, so long you're making money, no matter how little, take your profit and be contented. Right? Take your profit, no matter how little, it is your profit, no matter how little. But now, if you take your profit at, let's say, $5, close it, take another trade, $5, you're compounding. It's still something than losing your whole $20. So let's see how it goes. Now, at this point, the market is creating higher, lower, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. It's trying to create it. So let's see how it goes. At this point, the market is trying to act like it's trying to change direction back. But now I feel the market is still trying to accumulate liquidity on this zone, but this is not enough liquidity for me. So I'm not looking to buy. I still hold my bias on the sell. So let's just see how this goes. Sorry. Now, if I want to add your break and retest strategy here right now, this is simply just the edge strategy I just showed you. Now, if I want to add your break and retest strategy, mind you, the market just broke this zone, right? And now it's going to retest it. It broke it. It's going to retest it before it sells off. Let's see.
No, I would have taken this zone.
This zone, yeah? That was why I just had to bring it back to your notice. I had to bring it to your notice. Now, what did you see? What did you notice that the market just did here? It's creating an equal here. Right? Now, we've swept out this liquidity. Let me take this one off. We'll mark this one as good because we just swept out the liquidity on this zone. Okay? So now the market is creating an equal here. This is another confluence that the market is trying to build up liquidity for itself here.
Yes.
But this is not enough liquidity compared to this one. Have this in mind. This is not enough. This is just two liquidities. Let's see. This is just two. I'm coming, sorry. This is just two liquidity that the market is creating. This equal. Market is just creating two liquidity compared to this ones is having on this trend line. So I feel the market will still have to sweep out this one because this is much. In as much as the closest, my principle still stands that the closest liquidity is where the market is going to. But then this is too small for the market, for me to see the market go back up and sweep. But you can't really say. But let's see. Are you seeing what happened here? It has gone back down, still going. I want to be very sure we catch a very clean 1 to 10 at least on this trade. This is a 1 to 10.8. So let's see. Are you understanding at all? Now, mind you, what did you see the market is doing here? It's trying to, this is liquidity 1, 2. It's trying to create much liquidity on this point so that it can possibly sweep it out, go back to entry and come back. But let's see if that's going to happen. This is 1, 2, 3. When it's complete up to 3, then I start looking, okay, this market might want to sweep out this liquidity first before it sweeps out this one. But this one is not so sure. It's just choppy. But let's see. Mind you, we've had our 1 to 5 already. And at this point, we might close 50% of the running trade to leave the rest to hit the complete TP. This is how I trade. I like to trade with proper risk management. So I'm going to send you, I'll email the risk this thing to you later on. Okay, now what did you see? It has swept out this liquidity again. Now this is another zone. Still trying to use your break and retest strategy. Right? This is another zone that you see the market is testing. It broke it. But now we need to see a momentum candle. That's a Morabozu candle. That's a very big candle that will push it and break it. Then we'll know that yes, this is really an impulsive move. We have impulse, we have accumulation, impulse. This is impulse, accumulation, move up, impulse, accumulation, impulse, accumulation, impulse, accumulation. It's trying to give an impulsive move. So let's see. Sweep out liquidity. Now we'll see again. Now have it in mind that the market is already creating a trend line liquidity after this equal. right? I want to take it off. I like my charts to be very clean. Sorry. So, okay, let's see.
If you were going to get another entry, where would you make your next entry?
At this point,
Yeah.
if I want to get another entry, I would use a very low, let's say, lot size. Reason is because I have a running trade already. So if I want to jump in on this trade, let's say, obviously, once in a while, we'll have to be greedy. Let's say I want to get greedy now. I say, let me add up my positions again. I will scale up from this equal low, this one to this point. Now, what did you see here? For me, I want to add another entry from this point, but then I would need some confluence, extra confluence to take the trade. But if I want to just take the trade because I have running trades already, trend line number one as confluence one, 61.8 as confluence two. So I'm going to take it from here, let's say from here. And my principal is always slightly above. And I still scale it down. Let's see. So this is how I want to take mind you, this is it. I'm coming. Okay.
Mm.
I want to take this trade like this. Let's see. Now I'm using a very, very small lot size. Remember, because I know that okay, I have a trade running, and most likely, the market might want to sweep out this liquidity. I told you, wherever there's liquidity is where the market will want to go to. But let's see how it goes. Now we had the stop loss here. You get. But now what happens
Yeah.
here? We still didn't lose because we still have our position running. Still have our
Yeah.
position running. What the market is doing is trying to build up liquidity so that it can sweep it, take it out. Like I said earlier on, I said market wants to build up at this point. I said market wants to build up liquidity so that once it builds it, go back to its entry, then go. It will have to tank. But let's see. Now we've had a stop loss where with a low risk, but then our wins. The major thing here is our wins should be higher than our losses. So let's go. Let's see what happens here. Are you seeing what the market is doing now? Building up liquidity. This is what it's just doing. Market is building up liquidity, right?
Yes.
So let's see. I'm coming. Sorry. I'm coming, sorry.